Welcome to Copytraders Club, where you can learn how to make more money copy trading. I'm Gavin McCauley, my name and username on eToro. You can continue the conversation on Discord and Facebook. If you like this podcast and want to see it continue, you can do your part by recommending it to one person or group of people this week. Today we talk to a PI with huge returns. Significant capital gains, you might say. Here we go. Episode 38 of Copytraders Club, and yes, it is the PI CapitalGains, aka Nick Burke, who comes along to give us a glimpse of the person behind the bio. Beloved by his copiers, with triple-digit gains this year and last year, no wonder he's sipping champagne in the limousine as it pulls up at the steps of the Copytraders Clubhouse. He approaches. Nick, hello. Welcome to Copytraders Club.
Hi Gav, good afternoon. Good to meet you. Pleased to be here.
Well, it's indeed great to have you, and no need for Google Translate this week, as we're going to be speaking the Queen's.
The mother tongue, yeah.
All right, well, as you know from listening to previous episodes, in order to gain access to the VIP lounge, you need to answer a series of quickfire questions. Ready for those?
Let's do it.
Username on eToro.
CapitalGains.
Date you joined eToro.
May 2017.
Year of birth.
1971.
Place of residence.
Birthplace of rugby. Actually, Rugby, the town.
Profession.
Managing Director.
Briefly state what you aim to achieve on eToro.
Outperform the major indices over a multi-year period and 10x my invested capital.
Name one of your investing heroes.
I'd have to say Michael Burry, just purely for his ballsy move betting against the whole market, the subprime mortgage crisis in 2007. Excellent film and good book as well.
Name one of your favourite investing books.
It's not specifically an investing book, but it's called The Art of Thinking Clearly by Rolf Dobelli. It summarises your biases and affects how your decision making in everyday life, and obviously you can apply that to your investing strategies as well.
That completes the formalities. Let's proceed into the VIP section here at the Clubhouse. The glorious surroundings of the Copytraders Lounge await you. Nick Burke, aka CapitalGains, are you ready for this magical transition?
I am absolutely ready, Gav.
So here we are now, Nick, sitting opposite each other on these big sumptuous sofas in the magnificent Copytraders Lounge. How does it feel to be here?
Very good indeed. Luxurious. I'm enjoying the surroundings.
Well, we're going to enjoy having you here today, Nick, and finding out more about you. As you warned me in advance of today's chat, you have a pretty light digital footprint. So it was a bit tricky to find out lots of details in my usual stalking. Let's start with your name on eToro, CapitalGains. There are quite a few people with something akin to that name. There's CapitalGains with two Zs.
Yeah.
There's CapitalGains Dre and CapitalGain WTF. I don't know if you know what that stands for.
Well, I can imagine. I can imagine the acronym there. But when I set up my profile on eToro, I guess like most people, you're not really thinking years down the line, and I just picked a name where it does what it says on the tin. I'm just trying to grow my capital.
That's interesting. Do you know where that expression comes from?
I don't know. No.
Years ago, there was a product advertised on UK TV.
Ron Seal.
Yes.
Yes.
What was the product?
It was fence paint, I believe.
It was, yes, Ronseal quick drying wood stain.
That's it.
Does exactly what it says on the tin.
Yeah, we're showing our age now, Gav, as well.
That's okay. I hear millennials and Gen Z YouTubers saying it does exactly what it says on the tin, and I'm sure they've no idea what they're referencing.
No. Great marketing, though. It's a phrase that's stuck, and you always associate it back to that product.
Well, if ever I'm going to stain a wooden fence and I want it to dry quickly,
Yeah,
I know where I'm going.
exactly.
There's also many Nick Burkes around when I searched for you. So are you ever confused with the musician Nick Burke, known for his cowboy psychedelia?
No, because it's not a genre of music that I'm particularly into, so I haven't come across that other Nick Burke.
What about a second musician, Nick Burke, a Sioux Falls-based musician that specializes in light, fun, and interactive request-based performances?
No, I can't say that I've heard any of his music at all.
Okay, how about this last one? Nick Burke from Heirloom Wealth Management in Colorado, whose personal mission is to live each day with passion, positivity, love, and discipline, striving to become the best version of himself and to help others in their quest to do the same.
I haven't come across him either, and it sounds a little bit woolly for me as well.
Well, in that case, what would be your personal mission statement? How do you strive to live each day?
I try to live life to the fullest. I try to enjoy life, both professionally and personally. When I interact with people, I'd like to think that it's a positive experience when people meet me. Pretty down-to-earth guy that, just wants to enjoy life.
Well, it seems one of the things you like to do to enjoy life is to attend live music performances.
Yeah, that's correct. Yeah.
I saw you tweeting about Stone Roses recently. Is that correct?
Yes, I'm stuck in the late 80s, early 90s. I enjoy indie music. I've seen the Stone Roses a few times, Charlatans, Happy Mondays, more recently, Oasis as well. So, yeah, I enjoy my music as well as my sport.
Well, we'll forgive you for Oasis since you referenced all those other good bands.
Yeah, they were the legendary bands, the earlier ones.
It was a great era.
Yeah, fantastic. I don't think it's ever been replicated either.
Yeah. I bumped into Ian Brown once.
Oh,
Many years ago, I was walking down the Portobello Road on a very early Saturday morning after a big Friday night.
fantastic. Well, straight through then, Gav, was it?
Well, I mean, the street was deserted.
Yeah.
And I saw this little guy coming up the road on the same side as me. It was just the two of us, nobody else around. Presumably he was coming home after a big Friday night. And he was walking with that Manx swagger that subsequent rock imposters would consciously adopt. Yeah, it was Ian Brown from the Stone Roses. And we both sort of acknowledged each other with a little raised eyebrows and a little nod. Both kept going.
Yeah, fantastic.
You know. Yeah, I think I knew who he was. And I imagine he appreciated the subtlety of the acknowledgement.
Yeah. He's probably, at that time in the morning after a heavy session and a good night, the last thing he wants is some fans coming up to him and trying to get his autograph or a selfie taken with him.
Right, so John Squires, the guitarist from Stone Roses, went on to play guitar for another band called
The Seahorses,
which is an anagram of
I Hate Roses.
Or He Hates Roses.
He Hates Roses, yeah.
Which he claims is purely coincidental.
Yeah.
I'm sure it is. But he's a difficult man, that John Squires, isn't he?
Yes, talented songwriter, but they, artistic differences in the end, it drove the band apart, like most bands that have been together for a number of years.
Well, he's better off alone in his art studio near Macclesfield than being in a band, isn't he?
Yeah, he's up in Bollington, I think. I think that's where he's residing at the moment. Not that I'm stalking anyone, but...
Okay, well, talking about stalking, I also went deep into your Twitter account to see you at a gig by Paul Weller.
Yes, I've seen Paul Weller a couple of times. Loved his music from the Jam through to the Style Council and all his solo music as well. Really good musician live, holds the audience, really gets them rocking.
Well, you were certainly rocking and singing along. So what would you respond if I said to you, ba 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 da ba?
Oh God, is that clip still on Twitter? That's the problem. Once something's posted online, you can't take it back.
I'm sure one thing you can't take back is your love for Nottingham Forest.
And I wouldn't want to either. I grew up in Cloughie's heyday in the late 70s, early 90s. I was going to the City Ground with my dad. So, yeah, that's it. As soon as I was taken to the City Ground, that was my team. Never change it. But it's been quite a depressing time supporting Nottingham Forest for the last 30-odd years.
Nottingham's not where you're from, is it?
I was actually born in Manchester, grew up in Nottingham, and then moved to rugby when I was around about 9-10 years old.
Right, well, I've only seen Forest play once, and that was at Wembley when Teddy Sheringham was your star man.
Yes.
So that's me showing my age.
Well, and a little known trivia fact, who was the first goal scorer in the Premiership?
I'm going to say Gary Charles.
It was indeed Teddy Sheringham for Nottingham Forest.
Wow. The things you learn on Copytraders Club.
Yeah. Some useless little known facts.
Another thing that I discovered about you, which seems to be quite incongruous with your persona on eToro, is you like going to watch the darts.
Yes, I've been to see the World Championships over Christmas and New Year at the Ali Pali. Fantastic atmosphere. I wasn't dressed up, I hasten to add. We just went to the afternoon session, which was drinking and the darts, of course. Brilliant atmosphere. Absolutely fantastic. Loved it.
Yeah, I mean, maybe I have some misconceptions about the experience, but to me it seems like endless trays of beer, scantily clad women being wolf whistled by middle-aged men with garish, shiny, short-sleeved shirts stretched over their bulging bellies. And as an audience member, you can't even see the dartboard itself, can you? The crowd are just responding with shouts of, "Well, hey," when certain lights are illuminated to indicate where the dart has landed.
Yeah, I think the darts merely is just a sideshow, an excuse to get into a big hall and have a big piss up.
Very good.
It's a carnival atmosphere. It is great. And the darts is fantastic as well.
Well, we're having a carnival atmosphere here too today, Nick. And how did this come about? How did I come across you?
Well, I actually reached out to you, Gav. I'd listened to a few of your shows, thoroughly enjoying them, and I was interested in coming on the show just to share my views, my experiences from being a copy trader myself right through to a popular investor.
Well, we'll talk about your journey in due course. Before we do, can you give us some more insight into you by telling us something you're very bad at?
Queuing. And I'll give you a couple of examples. Airports, for instance, I travel quite a lot. So you're in the airport queue at security waiting to go through. The security guards are shouting every minute or so, take your laptops out your bag, take any liquids out. You get to the security desk, of course. People have forgotten to do that. They don't listen. You're in a retailing shop or a fast food restaurant. People are absolutely absorbed and glued at looking at their phones. The gap's getting bigger and bigger and bigger, and I'm getting more and more and more wound up, infuriated by it. So I'm a bad queuer.
Well, that's the most English answer imaginable.
I know.
Well, let's have a question from the art of people. Can you pick a number between 1 and 10?
2.
If you had enough money to retire and then some, what would you be doing?
I would like to tour America. Route 66, Vegas, California. I'd like to go and see these wonderful places that you see on Man vs. Food and really sort of look at perhaps the less commercialized parts of America. I think that's what I'd like to do for a couple of months.
Would you be touring around in a big Winnebago type thing?
I'd probably see myself, if I've got that type of money, more in a nice sports car, soft top sports car. That'd be more my style. We can dream.
Okay, Nick, let's get into it. If I could ask you to read your bio down to and including the strategy section.
Okay. I'm the managing director for a biometric security company with over 20 years investment experience. Corporate M&A activities have provided a sound platform for understanding and analysing the real value of businesses. I'm a member of the Institute of Directors. I've got the Certificate of Incorporation. My eToro fact sheet, elite level. I've been on the platform for 5 years. Total returns, 461%. Annualized returns, 50%, with a risk score of 4. My target is to outperform the major indices by 10% plus per year. My strategy, long-term investor, multi-strategy, strong fundamentals in thriving markets, looking for undervalued stocks with attractive PE ratios, excellent balance sheets with positive earnings and revenue forecasts. I look for portfolio diversification in assets and composition, and a big fan of dollar cost averaging.
Okay, there's a lot of detail in there. Let's unpack some of that. Managing director for a biometric security company.
Yeah.
When I saw that, I was going to ask you if you see many useful applications for eToro, but on further inspection, Almas appears to be more biometrics in the physical world. Eye and fingertip scanners, clocking in, clocking out, CCTV, that kind of thing.
Yeah, that's correct. Yeah, we operate mainly in the SME market. It's for access control in safeguarding environments like nurseries, care homes, general offices, gyms, etc. So it's biometric authentication to get access to buildings.
And where does the name Almas come from, do you know?
Almas means precious souls, at the heart of everything that you do in Hebrew. The deep meaning behind it was that we're at the heart, we're at the soul of your security.
Right. I thought when I looked it up that the answer would be in Mongolian folklore, an Almas, among other variants, also in Chechen and Turkish culture, is a creature or deity said to inhabit the Caucasus. You know, their equivalent of a Bigfoot or something. And there's a picture of a bear type creature as your logo.
Yeah.
So I thought that kind of fitted quite nicely.
Yeah, no, the bear is synonymous with strength and protection, and that's akin to what we do, and we provide security and protection for our customers.
Very good. At first glance, when I saw the statistics that you quote on your bio, I thought, here we go. Here's another guy in breach of Rule 4 of Copytraders Club. However, you're not relying on outsized previous returns from a different strategy. Your biggest returns have in fact been very recent. So you're not in breach.
No. I'm very true to my strategy. I haven't changed my strategy over the last 3-4 years since I've been on eToro.
And as another quirk of the scheduling of the episodes of this podcast, we had a guy on last week, Mark OD89.
Yes, I've listened to the podcast.
Who has a lot of similarities, I guess, with your kind of approach. You know, we'll come on to it later, but how your portfolio was made up and things like that, because you're at heart a crypto guy.
It's a big part of my investment strategy. I'm also very conscious of the volatility of that particular asset class as well. So, you know, I've taken steps over the last 6 to 9 months to try and balance that out and have some positions that offer growth in the equity market and also ETFs that perhaps just dampen down that volatility a little bit.
Sure, we'll get into all that in the next section. For now, let's run through some of these important statistics. You talk about volatility. So let's look at the eToro risk score, which essentially is a measure of volatility. How do you feel about your risk score?
Well, I've been at 4 for 3 months. I would actually say at heart, I'm probably a risk score 5, even a 6. That would be a fairer representation of my appetite towards risk.
Okay, now your copier numbers and AUM.
Yeah.
Let me describe the copier's graph to the listener. Dear listener, let me put you in the picture. Let me show you what I mean. Stone Roses reference here.
Yeah, I like it.
The graph shows a steady incline, then it's tapering off, followed by another little incline and a little plateau. Copier numbers 1087, 1087, and assets under management, all I can see here is between 2 and 5 million.
Yeah, just shy of 3 million.
Are you happy with where you are positioned today?
Yeah, it's all organic growth. I haven't featured on any of the editor's choice promotions. I haven't had any notifications go out from the platform at all. So I think I'm quite satisfied with the performance and the numbers and AUM at the moment.
Well, as I said to last week's guest, I wouldn't hold my breath about getting on editor's choice if I was you.
No, I know the rules and the algorithms. You're excluded if you're 100% plus gains in a year. So yeah, I don't anticipate I'll be featured on there anytime soon.
But good going to get 1,000 copiers.
Yep.
Do you have expectations to be double that in a year? Do you set yourself targets along those lines?
I haven't set any copier or AUM targets. I'm obviously mindful of my own targets that I've put in my bio. I want to outperform the market. So I think as long as a PI is performing and they're delivering on their expectations, then naturally and organically the copiers and the AUM will grow over time.
Yes, we will come on to your returns in the next section. Very high returns. But with the kind of profile that you are as a PI, drawdowns are also maybe higher than the average PI. I'll just tell you the drawdowns I can see as of today. Daily drawdown 12.84%, weekly 19.54%, and yearly 25.06%. Anything to say about those?
That's the price you pay for volatility, I guess, and looking for market-beating returns. There is inevitably going to be larger drawdown on riskier, more volatile stocks.
Okay, trades per week and average holding time. Trades per week 3.95, average holding time 16.5 months. Does that paint an accurate picture?
Yeah, I think that's fair. It shows that I'm more of a long-term investor than an active trader. I'll let positions run. I have conviction in the positions that I've opened, and I'll be ignoring any short-term price volatility.
Yes, we'll discuss how you're a long-term holder a little bit later on. For now, let's wind it back to your early days on eToro. As you mentioned earlier, you used to be a copy trader, but you since reinvented yourself as a solo investor. That was your second coming. Tell us about that.
Another great reference there to the Stone Roses, Gav. I'm impressed. Yeah, I joined eToro May 2017. I was really interested in the format of the platform, and like most people, got seduced by some of the traders that had delivered some great returns. So I invested some money in Alex Plesk and Jay Nemesis in the early days. Looking at Alex Plesk, God knows what's happened to him. His account just seems to have blown up since 2017. And I'd had probably 3 to 4 months of copying, and I was becoming more frustrated really about the trades that were being closed in red. And I was just looking at other opportunities in the marketplace that I wanted to take advantage of. So I thank both of those traders because I did close the copies in green. So I do thank them both for delivering some returns for me. But I thought it was time to really go out on my own and plough in some more capital. And also another reason for copying at first was to understand the platform in real detail. I had done my due diligence as much as possible on the eToro platform, but like everything, it's still a bit of a leap of faith when you are ploughing in significant amounts of money into an online platform that you hadn't really heard of in the past. It was 4 or 5 years ago as well, so e-trading was still relatively early back then. So I'd got trust in the platform. I was a lot more confident, so it was time to venture out on my own.
And you had experience of being an investor on your own prior to that as well?
Yes, God, the good old analog days where you're phoning up Charles Schwab to open and close trades. I've got a larger holding outside of eToro and personal investment. So that's probably 20, 25 years now.
Okay, that's interesting what you were saying about learning the platform. It does take quite a lot of effort to get to know your way around eToro, to be honest, and to understand all the nuances. And, I'm still learning. I think we probably all are.
Yeah, and you can look at the help guides, try and view some online YouTube videos, help guides, etc. But for me, I've got to live it, breathe it, touch it and feel it. And it begins to make a lot more sense to me. And I that's my way of learning. I understand things far better if I'm actually participating in it.
Speaking of understanding things far better, I understand you far better now, having just researched you for this episode. Before considering this episode and really thinking that much about who is CapitalGains, if I just look at you on eToro, it gives away very little of the person. It's a very technical sort of bio and pin post and that, if you ask me.
Yeah.
You're very active on the feed. You do lots of posts. Have you any plans to expand your communication in any way?
I have thought about that. And if I'm honest, I'm not sure there's that much of an appetite for another production of a YouTube video. I haven't had many requests to produce any other content. I appreciate the time that goes into this. Looking at what you do, Gav, which I think is fantastic for the community. I think if I'm honest, my time's better spent. I could put a huge amount of effort into producing a YouTube video that one man and his dog might view at the end of the day. So not at this stage. I'm not really sort of thinking about any video content.
Well, the counter argument to that would be you don't have to start a YouTube channel that's going to take over the world. It's just a channel of communication for those that are already copying you, just so they can see the whites of your eyes and hear your voice, and you're giving them an update on how their investment is going and where your mind's at with various aspects of it.
I think that's fair comment. It's very difficult to get your personality across just on the eToro platform. I'm very communicative on the platform and extremely responsive to any questions. So my copiers, I'd like to think, would say that they understand my strategy. I'm very clear in what I'm doing and why I'm doing it. And I do get back to all copiers if there's any questions that they need answering. But yes, I accept that from the more personal angle, it's very difficult to get that across without producing videos.
So all of your interaction is via eToro?
It is, yeah.
No Discord group or anything like that?
No.
Well, that then leads me to ask, how is your time split between, obviously, what is a very serious job? You're managing director of a company. You travel a lot, mostly between Ireland and the UK, I think. I get the impression you're a serious, that's a very serious career.
Mm.
So how much of your time, or what percentage of your time, goes into eToro?
I think instead of sort of splitting times and quoting percentages, my style of investing is more of a long-term passive approach. I'm not an active day trader. I'm not really interested in window dressing the portfolio. So I'll respond to markets as and when I need to, evenings, weekends, daytimes, etc. If I see an opportunity, I can take advantage of it. If the market moves extremely quickly and I want to get out of a trade, I can do that. But my full-time day job and my full commitment is with the Almas group and my position as managing director. Thoroughly enjoy my investing. I don't see it as a chore. It's something I thoroughly enjoy. So it's difficult. I don't really look at splitting time. And I think I'm not at a disadvantage because I've got a very serious full-time position at the moment.
Dear listener, just a little pause here to say a few things directly to you. The calendar is full until the end of the year. That will mean 52 episodes, which seems like a good time to pause and call it Season 1 and take stock. It's been a lot of fun and a lot of time and effort, but I'm pleased to be creating something of value for eToro users, particularly copy traders. Whether there will be a Season 2 depends on a number of factors. I say it elsewhere, but I want to repeat it again here to really encourage a little action from you. If you want to see the podcast continue, you can help by bringing more listeners in. A lot of people still don't know about Copytraders Club, so post about it on your PI's feed in eToro. Mention it on a Facebook group or in whatever Discord groups you're in. That's not too much of an ask, is it? On the podcast apps, there's always a share function that includes copy link. Use that. Or copy the YouTube channel link and share that. Or share a link to your favorite episode. There are many ways to eat an orange. I also have one of those affiliate links for new eToro signups in every episode's show notes. So, if you know someone interested in signing up, please copy and send them that link and help support the show that way. Now, I know these calls to action that you hear on podcasts can easily be ignored, and I always ignore them myself, let's be honest. But this time, I am asking you, as someone who listens to and enjoys this one-person independent podcast, to make a little effort to help it along. You can even press pause and take 2 minutes to do it right now. If you do, know that I am grateful. If you don't, every time you hear this bit, you will be overcome with a crippling sense of guilt and unworthiness. Until you do. Back to the show. All right, well, let's get into your portfolio and your investing approach, Nick. Let's start with asset classes. As of today, crypto, 61.5%, stocks, 28%, ETFs, a little over 10%. So you have 45 positions in all. 4 cryptos, 30 stocks, and 11 ETFs. Now, one of the most interesting things I discovered when looking into you is that cryptocurrencies in the value column is a little over 60, and crypto in the invested column is closer to 20. So, as you mentioned earlier, you like to let things run. You also have clearly been doing that with your crypto positions. And there's a significant amount of desync in some of them, particularly Ethereum. So tell us, Nick, how do you justify that desync? Aren't you making yourself unattractive to would-be copiers today? Don't you want to be adored?
I'm the resurrection, Gav. So, I absolutely take on board the syncing issue. However, my comments on that are that the reasons those positions are still open is because I believe that there's still significant upside to come. We're still in the middle of a bull run, right in the middle of a bull run in crypto, in my opinion. So I think there's room for those positions to go higher. So new copiers joining today, they're still going to benefit from those positions. Stay in the course with me. That will time also help synchronization as well. So as I mentioned, I've been true to my strategy. I've got my own skin in the game. So, I want to grow my own capital. And that's my belief that those positions have still got a lot more to run before I think about closing them.
Aren't you putting would-be copiers off today with that desync? Why not just close the positions and reopen them, and therefore be a more attractive portfolio to join in today?
Because, as I said, there's still room to go. I believe. Could be wrong, of course. The market could turn very quickly.
But if you're closing them and reopening, it shows you still have faith in the next run up, and you'll still have those positions. But people won't be put off by joining such a desynchronized portfolio as it is today.
Yeah, I guess it just goes against the grain and against the core of what my strategy is. I'm probably repeating myself, but I'm not window dressing my portfolio for people. It's a portfolio that's very clear. You can see where the gains are coming from. If you want to come along for that journey, then I'd be delighted to have people. But that's my strategy, and that's what I stick to.
Okay, that's interesting. Well, if you're running your PI role as a business, you have two main priorities: perform and get more assets under management.
Yeah.
And the best way to get more assets under management is to attract more copiers. And your current desync, I would suggest, is probably putting off more copiers because they just see the massive difference in invested in value and therefore think, I can't touch this guy. That doesn't concern you?
Well, it's a valid point, but as I said, I still think there is a long way to go in this crypto bull run. And I don't want to move away from my own core investing values, which have, I think, served me quite well over the years. So opening and closing positions to look more attractive is not a strategy that I'm really going to be adopting.
Okay, fair enough. You said in a recent post, it's among your objectives in the next 3 to 6 months to take profits in crypto once it breaks out from the accumulation phase. Again, are we just covering what ground that you just said? Do you think there's still a fair run up to go into 2022? Do you have targets for exiting or for taking profits? Do you see Bitcoin going to 100 before the end of the year?
It's certainly possible. It could break down. But my belief is that I'd set a target at the beginning of the year of 75,000. I think we'll reach that target, and I'll be looking to take profits probably from about 70k onwards and upwards. Looking at the strength of the market, how quickly it's moving, I won't be putting actually specific take profits on each position. I'll be looking at the momentum and speed of the market.
Did you see the recent news that the Volt crypto ETF has just been approved by the SEC? Is that important?
I think it consolidates Bitcoin's position as an investable asset. It gives it opens the gateway for institutional investment. It's a stamp of approval, so that will certainly help Bitcoin's price appreciation.
So what you're saying is that fewer people consider Bitcoin to be fool's gold these days?
I was trying to think of a witty response there, Gav. I'm loving the references, though. Loving the references.
I need to put in a link in the show notes to some videos by the Stone Roses so that any interested listener can understand half of the things we're saying here.
Yeah.
Okay, let's circle back to your role as a company director. You've been a director for various businesses and a managing director for two since 2015. Firstly, PHS Data Solutions and now Almas Industries. So you're experienced in the business world and you know how to lead a company. How does that make you a better investor?
I think real world business experience, it gives you a deeper, better understanding of how companies work. You've got exposure to P&Ls, the financial reportings, the ratios, etc. So it helps you analyze companies' balance sheets, some of the fundamentals. It gives you better views and tools to value companies and stocks that you're thinking about taking positions in.
And does it help that you can sort of put yourself in the position of boards of directors and understand their decisions? And when you're listening to earnings calls and things like that, do you think you're listening to them from a more informed standpoint?
I think it gives you the ability to read between the lines. Obviously, these earning calls, they are marketing. They've been put together, obviously, to promote a very positive picture to the investment world. So I think what it does is it does give you that insight into what's really happening in a company. How do companies react to what's going on in the wider economy?
And do you think your sort of BS detectors are heightened then when you hear answers from board members and you think, if somebody said that to me in a meeting, my antennae would spring up?
Yeah, it'd be going into overdrive. Yeah.
Now, you mentioned corporate M&A activities have provided a sound platform for understanding and analysing the real value of businesses. Have you been part of many mergers and acquisitions?
Yes, probably 15, 16 acquisitions in two different industries. First industry was an equipment rental business. We did a buy and build program to become the biggest crate rental company in the UK. So we acquired smaller regional players. And then in the document storage sector, we bought various regional strong companies and formed a national footprint and became number 3 in the UK. And then eventually we sold that business. So what that actually has taught me and is great experience is actually looking at companies. They've got clearly their valuation. You have a valuation. You've got to be looking on not just on the P&L, but what's the opportunities? What's the caliber of the staff? It's all about the people. Is there good people in the business? Can we move this forward? So it's a very much a gut feel as well. You're looking at people in the whites of their eyes and you're seeing, is this a good company that we're going to be investing in? Has it been well run? What's the culture of a company? How do you value that? It's very difficult. And so you've got to see it. You've got to understand it. And good culture in a business is absolutely critical to sort of future success.
So you bring all these things to bear in your investing practice also when you're buying stocks. You view it as you're buying pieces of a business, and therefore you ask all those same questions. You run through those same sort of mental models.
Yeah, in my head, I'm going through, very similar processes. You look at, the board. You look at, the board of directors. You look at the markets that they're operating in. What are the opportunities for the growth in that market? is it fundamentally a strong business? Less technicals, more fundamentals, and it's about the people, it's about the markets that they're operating in, the products and the solutions, and how sticky the customers are as well.
I'm wondering, do you value public companies in a number of different ways, maybe including some techniques that are taken from the private sector? Are there any sort of valuation methods that can work in both areas, and then you triangulate those valuations? Or how do you approach valuation in a way that's informed by your M&A experience?
I think firstly, you'll look at the headline figures in terms of basics. Is it a profitable company? What's the PE ratio? Is it fairly valued? What's the balance sheet look like? Have they got good stable assets? What are the long-term, short-term liabilities as well? So you go through pretty much the same process as a private company in terms of valuing a public company as well.
And does your BS detector also come into play when looking at the numbers?
Well, it's very difficult to massage, let's say, shall we say, massage the figures in a public company. You know, they're under extreme scrutiny. So you've got to believe that the numbers and the accounts that are presented are the ones that you go by. Now, that's not always the case, of course, but as a public listed company, they're heavily, heavily regulated and under a microscope in terms of the numbers that they're publishing.
Are there any other ways that we haven't mentioned already that your role as a managing director helps you make you a better investor?
That's a good question. I think what it's taught me is how I've applied my real world, real business life into my investing strategy is that it's given me good commercial acumen. I think I understand what's going on in the wider economy. I've got a good grasp of that. So as long as you've picked the right stock and you've got conviction in that stock and you're aware of what's happening in the marketplace, you know, I try to be directionally right over the long term than making, you know, a short-term gain. So I look for directions and look for trends and just try and pick the right direction. Being
directionally right rings a bell. I just finished Richer, Wiser, Happier, which is a new book where a guy interviews various value investors. And I think it was John Templeton was talking about being directionally right. What he concentrates on. You can't be perfect, so be directionally right. Let's talk about the stocks in your portfolio. When it comes to stocks, it looks like a very risk-managed portfolio. 30 positions, none more than 3-point-something%. Most are 1-point-something%. And then you have a bunch of ETFs, again, that look like you're aiming to spread the risk, diversifying. How wrong am I to consider that there's kind of a schizophrenic schism in your portfolio? You know, on the one hand, you're super safe stocks and ETFs guy. On the other hand, it's a YOLO crypto moonshoot.
Well, I guess that's why it's described as a multi-strategy portfolio. But interesting, I've never been accused of being schizophrenic in the past. I've just got total conviction and belief that Bitcoin and Ethereum have got a long way to go. We're seeing adoption and utility all the time. We've seen sovereign states, El Salvador, adopting it as legal tender. There's talks about Brazil, Panama next, the Lightning Network, Ethereum 2.0. I think, you know, it's undeniable and it's unstoppable. So that's why I'm in the crypto space. But my cautious, sensible business head as well tells me that I've got to have some more safe equity positions. And even then, you know, moving down the risk curve, I guess you could say, the ETFs are just index linked. And I've tried to pick the ETFs that I think are going to do well over the next 6 to 12 months.
So you have such faith in cryptos that you think it would be remiss of you to not have them play a significant role in your portfolio?
Yes, yeah, I do, yeah.
Let's just have a look at your results before we go any further. We haven't really talked about your results over the years. You started on eToro in the middle of 2017, and in half a year you got 82%. Then 2018 was obviously a terrible year for crypto people, especially, minus 70%. 2019, 32%. 2020, 280% practically. And so far in 2021, 151%. So those are huge numbers.
Yeah, and it tells a story. Got into crypto in 2017, and May, I think, was just the start of that bull run. And then we had crypto winter in 2018. The market collapsed 85%. I think the S&P also contracted 6% in that year as well, so that compounded the problem. But what that actually gave me was the platform for the outsized gains in the following years. It is extremely hard to get out of a bull market into a bear market. And I had absolute conviction in my strategy. So I just dollar cost averaged all the way down from Bitcoin was what at its peak, 20,000, down to, I think I managed to buy at about 4,500. So I bought all the way down, set up the portfolio then for the following years. You know, in anyone's sort of investment journey, you learn a lot about yourself. You ask constant questions. You know, is this asset class just going to collapse? It's gone 80%. Can it correct further? Will it ever recover? You know, these are the real soul-searching questions that you ask yourself. But I did have belief that it would recover. It was a pretty typical sort of cycle in crypto. And I think we'll see a very similar cycle in the coming sort of years as well. It could very easily correct another 50, 60% next year.
So when did you become a PI?
It was October 2020, last year.
Okay, so in those early years, you were not thinking about becoming a PI, right?
Not particularly, no. I was more interested in, you know, trying to maximize my own gains. I was putting my strategy together for eToro, riding the sort of crypto wave. 2018 was a disastrous year for most people on the platform. And then everyone starts to recover in 2019. We obviously had, you know, the advent of COVID, etc. And then last year, I decided just to apply for the PI program, got accepted, and then fortunately and thankfully, I've managed to rise to elite level. And I really do appreciate the copiers that have decided to join me and have got me to that level.
So in 2018, what percentage of your portfolio was crypto?
It was the majority, Gav, I would, if I can remember rightly, I would say it was around about 80% crypto.
Okay, and by the time you became a PI, had you already settled into your current pattern of portfolio management?
Yes, yeah. And I'd say that my current portfolio, the composition of it, I'm really happy with. I haven't opened or closed any trades for probably about 6 weeks now, looking or trying to sort of look at what the next 3 to 6 months holds. I know what I'm going to be doing with my portfolio if the market plays out as I hope it does and expect it to. I've positioned it to take advantage of the bull run in crypto. I think we're still going to see an everything rally in Q4. I think that we're going to see some strong Q4 results, and guidance may well support that. So I think even in equities, there's further upside to go. And then, look, trying to time the market is nigh on impossible. So I do think we will see quite a deep correction at some point in 2022.
And how will you handle that? Will you be emotionless, made of stone?
I'm going to be, as I said, closing out some crypto positions, hopefully on the way up. I will be trimming my tech positions, and what I think will do well, even in the face of a deep correction, will be some financials, pharmaceuticals, maybe even some commodities as well. So, yeah, I've got a plan in my head. I know what I intend to do when the market moves, but trying to time it, well, let's say that's the art of probably getting your outsized gains is the perfect timing.
Okay, why don't you tell us about your best and worst investments?
Okay, so I would say my best and probably most enjoyable investment was in Hertz. So they filed for Chapter 11 bankruptcy. The share price collapsed. It was speculation, but it was a hunch that I thought, look, this company's got a big brand. It's got a large footprint across the world. It's not going to be allowed to fail, and there'll be a phoenix from the flames. And indeed there was. So they came out of bankruptcy, and the share price rocketed something like 160, 170%. So I managed to get out, I think, at about 155% profit. Wasn't a massive position, but it was probably my most enjoyable and favourite trade.
So Hertz, this is the one.
This is the one. Great segue into the roses again.
Okay, how about your worst investment, and what did you learn from it, most importantly?
I would say it's Dash in crypto. I was being swept along with the euphoria in December 2017. Dash, God, I think it went over to over $1,000 at one point. And I FOMO'd in, and I've still got those positions open today. And they're really just to serve as a reminder. If I get a little too excited and I'm thinking about taking a risky trade that I haven't really got total conviction in, I'll just remind myself and have a look at those Dash positions.
I'm having a look at your Dash position. It's currently 81% down.
Yeah.
That hurts.
Hertz and Dash.
Okay, let's talk about your copiers.
Yeah.
What kind of person should copy you?
I think this is just a general comment, really. Look at a PI's bio. Look at the historical performance. Have a good look at their portfolio, the trades that they've been closing, their feed, the communication, and if you like what you see, you like what you hear, and you're aligned to their investment strategy, then click copy.
Yes, now, a bit like the conversation we had last week with Mark, it needs to be someone who can handle the ups and downs. Your monthly chart is not a sea of green. There's red, there's some big old reds. So if you can't handle the occasional double-digit red, it's not going to be for you, right?
Absolutely, yeah. Look, if you can't stomach some volatility, then I'm probably not your guy. It's still really frustrating. Not really just for me, but for copiers that I see almost day trading, myself and other PIs. It's crazy. It's the fastest way to lose your money. It's behaviour, and I know it's your biases taking over and emotions, and that's probably the biggest factor in anyone's trading is trying to control your emotion, fighting your biases, and have conviction in what you're doing. But the short-termism that is on eToro, it's disappointing because people are losing money, and we want people to be in the green.
Yeah, just looking at your results here, it's very easy to be tempted. I'm very tempted when I see big numbers like this. I think part of me wants to, stop messing around and just put my money into somebody like CapitalGains and, have a 200% return one year and 150 the next year. But it's easy to say that. How would I feel if I was in the middle of a September of last year, any of the Septembers. In fact, September is always a month where things often do dip.
Yeah.
I'm looking at your last 3 Septembers. Drawdowns of 7.45, 10.16 and 8.50. When those happen, and if they're preceded by a red month, it's difficult to keep a cool head in those circumstances. What would you say to people who are in that moment?
Trust the person that you put your money into. And if that's me, you've got to have faith that I've got the strategy, the right strategy, and I'll be true to that investment strategy, and that there will be some green months ahead. Of course, nothing's guaranteed in this world, but that's where you have to look at the overall performance, the longer term view. It is incredibly difficult to fight your emotions when you see your capital shrinking, you're in the red. It's so tempting just to click stop copy and get out, but it's proven time and time again, the more passive investors outperform the active day traders.
Yeah, your numbers are pretty mad. Like I say, I am sort of tempted to stop pussyfooting around with incremental gains and just, have some balls.
I'm not in it for 5% a year, 10% a year. That doesn't really interest me. So I'm prepared to take some pain along the way.
Do you have any copiers that copy only you?
Yes, I do. Yeah, I scroll through some of my copiers' portfolios, and pleased to see that I am the only PI that they're copying. Combination, they may have some other stock positions or crypto positions, or they've just copied me, and that's it. It's one of the actual frustrations of eToro. I'd like better management information, better analysis on your copiers. It's very manual. It's very laborious to try and click through and look at all your copiers' positions, how they're performing. There's got to be a better way of reporting metrics that eToro can put together on copiers.
Well, I see a lot of copier positivity on your feed. Answers to your posts, communication exchanges that you have. I suppose it's easy to be pleasant when you're looking at triple-digit gains.
Yeah, I try to be very clear. Any position that I open, I explain why, what I'm anticipating in the market over the next sort of few weeks or months, and what that means to our portfolio. I'm very conscious. I'm not just managing my money. I'm managing a lot of other people's money. So I try to be clear in my communication, and I don't just report and recycle news. What I try to do is actually get across what that news means for our portfolio. What am I going to do on the back of that news? What does that mean for our positions?
If someone was thinking of copying you, would you recommend that they aim to do so in one of your red months? Or would you argue that timing is impossible? Join the party whenever you can.
Yeah, look, it's the old cliche. It's time in the market, not time in the market. What I'd look at is really, I can't answer that question on behalf of other people. You've got to look at what your own investment goals are, and then align those to a potential PI or someone that you're looking to copy. Whether it's short, middle term, long term, whether your risk appetite is crypto, everyone's investment goals and appetite's different. So that's why I encourage people to look deeply into a potential PI, not just the headline grabbing numbers. I was guilty of that myself when I joined. I thought, my God, I want a piece of the action. I want 30, 40, 50% gains. And it's very tempting, especially in a bull market that you don't think is going to end. But all good things do come to an end, and they came crashing down around our ears in 2018. And there was some heavy losses that people sustained. So if you're someone that is aligned to what I'm doing, my performance, my style, then absolutely I'd be delighted to be that only PI. But I wouldn't recommend it. I think it's best practice to be diversified. So you might balance me out with someone that is perhaps a risk score 2 or 3, more safer, predictable gains, and a much more smoother graph over the year.
You would recommend that to others, but is that what you would do?
I wouldn't, because I'm not really in investing just to match the market. I want to try and beat the market. It doesn't excite me to be kind of index linked. So I wouldn't personally do that myself, no.
Interesting. All right, you've already mentioned one change you would like to see on eToro, which is from the PI's point of view, better data on your copiers. Do you have any other ideas for improvements they could make to the platform?
Yeah, I've been thinking about this, and I think the platform needs to make it easier for people to analyse and choose people that they're going to copy. What I'd like to see is an all-encompassing quality score. So it's out of 100, sits next to your trading name, and that quality score encompasses every type of metric that eToro hold on you. They've got a wealth of data that they're farming all the time, and I don't think they're utilising it in the best way. It would mean obviously your performance, your risks, how long you've been on the platform, how long you've held trades for, and in what markets. I'm sure they can come up with an algorithm that produces an all-encompassing quality score. So you look at Gav McCauley, he's 85 out of 100. He is a solid bet. I'm going to put my money on him.
Is it really possible to reduce all the complexity down to a single score, you think?
Yeah, I do. Yeah. There'll be some very clever people and programmers that could put an algorithm together that would encompass all the metrics. And what I'm trying to get to is that I think it needs to be easier for people to be choosing the correct person and not just being blinded by a couple of months' results, which is extremely risky. I'm just trying to get to a fairer, more quality-based score, and not just, a fantastic month that they had on a meme stock, for instance. There's got to be a lot more behind it.
Sure, that's certainly a noble goal.
Yeah.
But I would question whether it really is something that could be simplified down to that level.
One for eToro, perhaps.
Any other ideas you've got there?
I've got a pet hate, actually. You cannot see the amount of followers you've got on any smart device.
Yeah,
it's just a pet hate of mine, and I've raised it with my account manager. They've put the suggestion forward, and I'm sure they've got an extensive, long roadmap of development, and that's way down the list of priorities. But it's just a pet hate that I've got.
So you can see your copier numbers, but not your followers?
Yeah. I couldn't tell you today how many followers I've got. From my last count from my account manager, I think it was around about 5,000, but it's just, something that should be visible on your stats page or on your home page, but it's not.
If you're on a device, you mean?
Yeah, any smart device, yeah.
You've got 5,388.
Oh, thank you.
But you can see that on your computer?
Well, I use a Microsoft Surface, which is, eToro presents that as obviously formats it as a smart device.
Okay.
So I can't see that. And I'm very mobile, so I'm on iPads, iPhones, laptops.
Yeah. I suppose I'm more interested in the followers number as well. When people add me. Although I've got 4 copiers now, even though I specifically say, don't copy me. I don't want anyone to copy me. I won't think of you when making decisions. And yet still.
Yeah.
So I imagine it'd be easy to become a PI and have loads of copiers.
Well, it just shows the psychology of when people are actually looking at investing their money, there's perhaps not enough thought. And that's I don't profess to know the correct way, but as a point of advice, it would be to spend a little bit more time researching where you're going to be putting your money. Don't be seduced by those short-term gains that you'll see on a graph. I think it's one of the fastest ways to actually be losing your money.
Here's another question I often ask. Hopefully there's a different answer from previous. What other PI would you say you know best on a personal level?
None.
That's the usual answer.
Yeah, I haven't really interacted with any other PIs, and that's not by design. It's just, I haven't interacted with anyone. I'm on the PI Telegram group, but I dip in and out of that. But I honestly don't know anyone on a personal level, and I haven't really exchanged communications regularly with any other PI.
You must have an idea of your peers on eToro. I'm thinking Bees84 and Mark, two people I've spoken to. I would put you three in a sort of in the same area of expertise, I guess.
Yeah, I actually reached out to Mark. I listened to his episode on your show, Gav, and thoroughly enjoyed it. And looking at their performance and portfolio, it's quite similar to myself. If eToro were perhaps thinking about putting events back on, I know they used to do that. I'd be certainly up for meeting some people and having a few beers and sharing experiences. I think that's quite important. There'd be a lot of value in that as well from eToro's perspective. I don't think there's any substitute for meeting people face to face.
Does it not annoy you that eToro doesn't present you guys in a bracket, say on the Copy People page, crypto strong PIs?
Yeah, I would certainly think that's a great suggestion. If I'm sitting in eToro shoes, they are regulated. They've got to be seen to be offering sound financial recommendations, and perhaps PIs that have been returning 100% plus is just too risky for their appetite. But I certainly think there could be a section according to sort of performances. I know you've got your filters, but it's quite difficult to get to someone like me if you're just going through, all the different various filters. And we've all seen the bump and the spike in copiers when perhaps a PI gets a notification sent out from the platform. This guy's not correlated with the market, or this lady's got 1,000 copiers, etc. Everyone will dive onto their profile. And of course, you'll get quite a few which will look at their performance and just automatically click copy. But what I could say is, though, from the organic growth, even when Bitcoin corrected 50% recently from 65,000 to kind of 32, 33, I lost about 8% of my copiers, which was a pleasant surprise, if I'm perfectly honest. I thought it would be quite deep and probably a lot more than that. So I think organic copiers tend to be a bit stickier or more stickier than perhaps the eToro promoted copiers that look at editors' picks or look at the notifications.
Because they're more informed and they stay more informed, they read your posts, they buy into your personality and your approach.
I think so. I think they've taken the time to look at me as a PI or anyone else that they've decided to copy. They believe in the strategy. Of course, the line that historical performance is no guarantee of future results, but at least it gives them a level of confidence that there are potential returns in the future. So yeah, I think they've probably spent a little bit more time looking deeper into what API is about.
Okay, Nick, final question. If you were in my shoes, what question would you like to have asked yourself that I didn't?
I think you should have asked, how has your personality and life experiences shaped you as an investor?
Let's imagine I've just done so.
Okay. I've played a lot of sport, very keen footballer. So By nature, I'm quite competitive, determined and resourceful. We've been through, my CV and my business background. So combining that sort of, competitive nature with some good commercial sense, I've adapted that to my investing sort of strategy. And that's the core of what I'm about, I guess. I'm quite a resourceful guy. I'm very measured. I don't panic. And that's what I'll be carrying forward. And hopefully the gains will continue.
Well, I look forward to watching those gains continue, those capital gains. Nick Burke, it's been great to have you here today.
Thoroughly enjoyed it, Gav. Thank you for having me.
So there you go, listener. That was Capital Gains. I really enjoyed getting to know Nick. As we discussed, I didn't really know much about him before researching him for this episode. And really, these are the kind of PIs where I think an episode of Copytraders Club brings even more added value than normal, revealing the person, what they're all about, and what a copier can expect from them. Thanks to Nick for coming. He's a big supporter of the show. That's all from me. You can continue the conversation on Discord and Facebook. If you like this podcast and want to see it continue, you can do your part by recommending it to one person, or indeed a group of people, this week. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., and so forth.